Theotrade's 2021's high probability income generator. I'm Don Kaufman, and you are watching a Theotrade presentation. It's a risk disclosure. We're not financial advisors nor a broker dealer. I spent about 15 years in the brokerage world. That's why I always kind of detail that. I'm no longer in the brokerage world. I'm out of the business. And glad to be out. It's actually my last year in the brokerage world was 2015. Next on the docket, this is why you're here. And I think this is critically important. So we're going to discuss a little bit today, Ultima trades, which are absolutely idealistic for the current market environment. So you can potentially generate monthly income. So we're going to talk a lot about what an Ultima trade is, generating some monthly income. We're also going to learn the trading symbol that professionals use on a daily basis to be able to create these style of trades. In fact, I'm going to cover that here momentarily. You're going to learn how and where to find edge as a retail trader. So in this current environment, we're not going to talk about edge in general. I'm going to talk about the here and now. Where does edge lie in the present market environment? And I think that that's absolutely critical for you guys to understand. We're also going to discuss reaping the benefits of high probability trades while learning how not to get crushed with large losses, which, sooner or later, everybody in this business has to face the dark side. And the reality of the business is people do take some losses, and it's about not getting crushed with large losses. Last but definitely not least, you're also going to discuss what products are going to make some of the best candidates for these Ultima trades, and what products, more appropriately, are also a recipe for disaster, which, people have tendency to move to not so great products. And when I say the word products, listen, products basically means a stock. It means an option. It means a futures contract. It's whatever. It doesn't matter. I mean, in the end, all of this, what are you doing in the business? You're buying stuff and you're selling it. And people make it far too complicated. What can you do as a trader? Well, I can buy it, or I can sell it. And that's it's kind of what it breaks down to. So one other aspect I wanted to bring to your attention. So throughout the course of today's presentation, I am going to be referencing a particular indicator. We will provide this particular indicator to you today completely free of charge. And we do that because I just don't feel it's right to show you an indicator and then just pull it away. Oh, you have to pay for it. It's a $500 indicator. And we do this because, number one, I reference it constantly. I also reference it even on some of the evening videos that I do. So if you've ever tuned into some of the weekend updates, some of the evening videos, I'm always talking about auto expected move. It's an incredibly quantitative indicator. It's not like, a MACD or a Fibonacci or Bollinger Band, just completely quantitative indicator. And it's an indicator that's literally changed the way that we view markets. So this is your gift. Stay with me right until the end of today's webcast, and we will provide you a specific and express link to this particular indicator. And again, when I say it's an indicator that changed the way, this is just a quick screenshot here in the XLF, but there's a reason I like to do this when the market's open. Just come right over here into the, here, if you want to see the XLF, and we'll go auto expected moves, boom, there it is. Okay, what the indicator is representing here. And I'll just take you through it real briefly. You can see there are 1, 2, 3 lines. Those 3 lines are depicted by option markets. What I'm saying is the 3 lines that are kind of highlighted on your screen there, those, and I'll even highlight this week's, those are actually projected the week forward, meaning that on a Friday, you can already see next Friday projected move. How are we projecting the move? We're actually using the options marketplace to depict risk moving forward. And you go, well, how does that work? Effectively, that's what options do. Options are about handicapping risk moving forward. So here are the financials. Okay, here's the financials. And the financials, let's say this week started at $38. They're projected to move up to $38.81 or down to $37.33. And they're going to stay in that range, a very high probability amount of the time. But this automatically puts those on there, and you're like, well, how can that help me? I don't know, take a look at stuff like Apple's almost to the upper edge of the expected move. Take a look at, something like Amazon, almost to the upper edge of the expected move. It it actually dictates to you. Look at Netflix, it's already outside, dictates to you probability right off the bat. So I think it's an extraordinary indicator. And again, we will provide that link to you. You must stay with us right until the end of the webcast. A couple of housekeeping items before we dive too deeply into this. Listen, this is a skill set. You're gonna have to pay attention. I'm gonna throw a lot at you. And if you're here today, I'm gonna tell you right now, like you can be a very, very newbie in this business and you're still going to grasp a huge amount. Okay. You could also be highly skilled in this business and you're going to grasp a huge amount. So I intentionally gear this for both sides of that spectrum, which is not an easy task because, we'll start off a little basic, then we'll go to the extremes and then we'll pull back a little bit. Okay. If you're brand new here today, big strokes of logic is what you want to be able to grasp. But everybody, listen, shut the door, turn off Skype chat, whatever is distracting you, chuck Facebook in the garbage, phones on silent mode, definitely kick out the kids. You took the time to be here. This is important. I'm serious. Focus on being here because you're going to be shocked how much you learn over the next approximately 90 minutes. Here's a little bit about me. Some of you guys might be brand new here, which is fine. It's excellent. But you have no idea what you've walked into, but you have no idea who I am. Okay. I don't know you. You don't know me. So here's a little bit about me. Again, my name is Don Kaufman. I grew up in this business. When I say in this business, I grew up around traders. Specifically, I grew up around market makers. And, people always ask, like, how did you learn the business? How'd you get involved in the business? I didn't do a degree in trading. I didn't do a degree in business. I have a degree in molecular genetics. You want fries with that? It was an exciting degree to do. By the way, that degree really wasn't exciting until about 18 months ago when COVID hit. And I'm like, holy crap, I actually understand what they're talking about. So I did a degree in molecular genetics and went to work 3 weeks out of college in Chicago. And I never left. So what brings me to you though today is I watched order flow for 15 years, and it's in large part of why I'm here. I have a extraordinarily unique skill set that maybe 5 or 6 people in the world have. And that happens to be, I had access to order flow and the largest options order flow, okay, in the entire industry. And I had access to that for the better part of 15 years. So as I said, I grew up around traders. My uncle started a trading firm in the 1970s. It was called O'Connor and Associates. He sold the firm in 1992. It's a multi-billion-dollar deal. That was hailed as one of the greatest trading firms ever. I mean, most of the big trading firms that are out there today were original partners of O'Connor and Associates. So that's how I got involved in it. After about 2 years trading in Chicago, I was invited to a startup brokerage firm, a firm that like nobody at the time even heard of. Is called Thinkorswim. And I went to work for Thinkorswim officially and full-time in 2001. And I was actually deemed the education guy. They said, you're young. And at the time I was 24 years old when I first started working for them. And they said, you're young. You want to go fly around the country? Here's a credit card, have a ball. By the way, you don't even have to live in Chicago. So packed up, moved to Scottsdale, Arizona, and I flew all over the world. And actually, I built their entire education division. And we also managed a substantial amount of money. I also went through a phase where I managed about $300 million for registered investment advisory there. But it's a little bit of background over there. I also was on the executive crew at Thinkorswim. We went public in 2007. Then, of course, we were acquired by TD Ameritrade in 2009 for over $600 million. It was great. And people always ask me the question, why did I ever leave TD Ameritrade, or why did I ever leave the brokerage business? I had a 5-year lockup clause. From 2010, I signed to 2015, and I spent the 5 years. And of course, they gave me a little bit of a parachute out of TD Ameritrade. I had to take off a year. It roughly took off a year, and then we launched Theotrade. So it's a little bit about me, a little bit about my background. And I always tell people, like, what's the unique skill set? I watched order flow. This is how we actually learned about retail clients. You're a retail client. I'm a retail client. We learned about retail clients. We studied retail clients. But you see a lot of education out there. Yeah. How many educators had access to 7 million retail clients? And we had an entire group of like actuaries at TD Ameritrade that did nothing more than data crunch. We could ask them any question. If you have a question about your trading, you could literally say, hey, Don, I've done iron condors. What's the success rate of this? I've done this. What's the success rate of that? And, we could tell you to a T. We knew exactly what worked and exactly what didn't. And I put so much into that. And I got to tell you, I seriously considered, I'm like 2015, I'm like, I'm going to be out of it. I took off a couple of years. I spent exactly 3 weeks at home, and I would just sit there and trade and start talking to my screen. And my wife's like, you should put a microphone in front of you and broadcast to people. And I'm like, done. And now we call it Theotrade. So Theotrade's a little bit bigger than that, but we'll get there along the way. So we studied trades. Wallet, Thinkorswim, and TD Ameritrade. That's how we built education. So what you learn here comes from watching literally billions and others' mistakes, but more appropriately and more importantly, what works best for retail clients. I put very little weight, very little stock, if you will, into market making. Market making is a completely different business than a retail trader. I'm a retail trader. I've been a retail trader since 2001. Okay, before that, yes, it was a market maker, but retail trading is where it's at today. By the way, last thing on here, and then we're going to jump into this head on. If you ever need to get a hold of me, and I think this is important, it's at least important to me, just go to support@theotrade.com. I use a general inbox. All you have to do is put Don in the subject, and it'll go directly to me. So support@theotrade.com. We answer emails. We answer hundreds and hundreds of emails. Here's me. This is the last time I was actually in Chicago. It's kind of sad. I mean, I spent a lot of my life, going back and forth to Chicago, but 2019 is the last time I've actually been. It's just over 2 years, which is crazy. This is actually one of the more memorable times on CNBC. I've done a number of media hits, and I continue to do this. What are Ultima trades? Let's jump into it. Guys, ready? So sit down. It's going to get wild now. This is not going to help the caffeine situation. Okay, Ultima trades. First of all, higher volatility is and has really resulted in significantly more options premium. That makes options higher priced. So for those of you that are not necessarily in the know, okay, I am going to mention options. Okay, I always say I said the O word. Options are a great way. I'm not going to sit here and like shove options down your throat every 2 seconds, but options are the most pivotal way to handicap risk moving forward. And you have to understand that we're in a considerably higher implied volatility environment, okay, than we have been, obviously to the onset of COVID. And options implied volatility skew is also at historically high levels, which I'll talk about skew. And then you have the volatility of the volatility remains at record highs. And that's what Ultima is. So everybody always asks like what Ultima is. We're going to get there in a second. First of all, again, there's a reason I like to do these sessions during live markets. How many people here are familiar with the VIX? VIX, put your hands up. Just say yes or no in the chat. Okay, these are not rhetorical questions. You should answer them. Okay, let's look back over like the 15 years in the marketplace, and you can see this is kind of where we're at right now. In fact, I can do a better job highlighting it. This is kind of where we're at. This has been the low end of volatility since the onset of COVID. Prior to that, there's a whole lot of years. This would have been the high side of volatility. All right, volatility before that was down to like 12 region. So we're at 17 today. So you can say unequivocally, volatility has been a lot higher since the onset of COVID, no question about it. But that's not why we're necessarily here. See, skew, which I'm going to talk about here momentarily, is also absolutely record high, off the charts. I never thought I'd see skew as high as it currently is, which I'll talk about again in a second. And then we talk about the volatility of the volatility, which remains at record highs. Now, when people hear the term Ultima, they're like, it's ultimate. It's not ultimate, it's Ultima. See, you have volatility, and then you have Vega, okay? And then when you have Vega describes basically, okay, the change of volatility in an option, yada, 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 all right? And as you start to go out, there's Vega, there's Vama, and then there's actually Ultima, which is actually a tertiary Greek. And that's actually why these trades are so incredible right now. Like when people talk about like, what are Ultima trades? It's the volatility, the volatility, the volatility. Ultima is actually why it is such an incredibly profitable strategy this point in time. And I'm going to explain exactly what that is. So Ultima is not ultimate, it's Ultima, which has a lot to do with the change of volatility. So with that, we're going to talk a little bit about skew as well. You don't have to geek out on this stuff, right? Normally, normally this is what a normal distribution curve might look like. Well, right now, the marketplace is highly skewed. That's all I want to elaborate upon in this particular slide. Like listen, I just figured I'd throw skew up there, and you understand what skew is. It's like a distortion of pricing. And I want you to think of when somebody says skew, you think of, oh, it's skewed. It's obviously it's a distortion of pricing. So then I'm actually going to show you record skew. And if you've never heard this symbol, I said during the, what are you going to learn here today? I go, well, there's a symbol, and the symbol is called skew. S-K-E-W. S is in Sam, K is in kick, E is in echo, W is in wow. Anyway, skew, there it is. That's where skew was. This is the history of skew. Skew only got started, they started recording skew in 2011. That's 2011 to current time. Look at that. What does that have to do? All right. This is the out of the money puts versus the out of the money calls in the SPX. What does it mean? It means we are skewed. It is wild. All right. It's like the world right now is pricing catastrophic amounts of risk to the downside. We closed the other day to 162 skew. And again, if you're not familiar with this, you can look this up on any trading application. Like, look, there's a symbol called skew. It's only calculated once a day. So if you pull it up, it's going to look like this. Doot, 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 doot. It's not going to do it for you. So you got to know it's calculated once a day, but skew, it's record high. Like literally the second highest print ever recorded was last Friday. So record high skew. So how can we actually use skew to our advantage? I mean, skew provides edge. It provides edge in sale of the out of the money options. Okay. And again, I said the O word. So many traders are currently buying options and in effect tweaking pricing to be beneficial for premium sellers. Now, this is the point where I want to mention to you, okay, how many people here, right? How many people here are almost brand new in trading, let's say in the last 2 years? Come on, people, admitting it's the first step today. How many people here brand new? You traded for the first time in the last 2 years. Okay. Anybody? 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 So only a handful. Nobody ever wants to come forward and say, me. Okay, listen. If you are, first of all, you're not alone. You realize that there was actually, right after COVID, there was a 2-month window where 6 million brokerage accounts opened just at Robinhood alone. Okay, and I'm not necessarily a big advocate of Robinhood. I use a couple of different brokerage firms. I do not use Robinhood, but you have this onslaught of people coming into the marketplace. And those onslaught of people, what are they doing? Rolling the dice. They're buyers of options. Definitively, they are buyers of options. There's no if, and, or but about it. How could I possibly know that? I don't know, 15 years in the brokerage world and knowing the rules at Robinhood. What are the rules at Robinhood? They are not going to let you sell options at Robinhood. They only let you really buy them initially. I mean, they're pretty strict over there. And they're strict over there because they get very, very inexperienced clientele. And in doing that, basically, they've actually skewed the entire market. So many traders are currently buying options and they've been tweaking pricing. This has a lot to do with the skew. And I'm going to show you exactly where that edge happens to be as we go along here. So with that, learning to sell options. Many have actually heard this through the grapevine that selling options is a way to make money. But if you've experimented with it, you're going to know that there's a lot of risk. Most people that learn to sell options, right? They come in and they do things that are, I don't want to say wildly incorrect, wildly risky, because selling options can be extraordinarily high probability, but that could be a very double-edged sword. You're like, yeah, I'm making money. Oh, I got killed. Okay. Today's session is designed to kind of separate some of the myths from the real risks, the fact from the fiction, all about selling options premium. And if you stick with me in this, I'm telling you, you are going to learn a tremendous amount, because selling options now is completely different than it was even 5 years ago. It's completely different than it was 20 years ago. When I first got into this business, I was a big time premium seller. I worked for a firm starting in 98. We were huge in premium selling. It's totally different business than it currently is. And that's what I want to get down to here is what's changed, what's the right way to do this, okay? And again, if you've heard this before, about selling premium, you're really going to want to tune in because you think you've heard everything you haven't seen. Most people do not know right now where the edge lies in this business, and that's what I'm going to cover. Don't panic. Everybody can do this, right? And I put this out there because really anybody can do this. Maybe you know nothing about options coming in here. Maybe you're, complete and total newbie, right? It's fine. As I said, I'm going to play to both ends of the spectrum. We're going to start basic. We're going to go extreme. We're going to start basic. I want you to be able to grasp, if you're brand new, big, broad strokes of logic, right? Big concepts and so forth. If you're brand new, if you're a little bit more in tune, if you've actually sold a little bit of premium before, you actually got to focus on the portion when I start talking about criteria. And criteria is the little nuances. It's actually like literally a breadcrumb trail of how to execute upon this. One other news flash in here. Selling premium used to be a big boy kind of thing, meaning that you had to have a sizable account, okay? That today could not be further from the truth. So today, $5,000 account, you can sell options inside of your IRA, okay? Again, we're going to dive right in over here. As I say that, and I'm talking to you and moving around here at the same time, I gotta make it cooler in here. It's hot. So I don't think I mentioned this, but I'm broadcasting from the Virgin Islands. This is where we live now. So we moved from Scottsdale, Arizona to St. Croix in the U.S. Virgin Islands. So it's a little bit humid today. It's only like 88 degrees out there, but it's about 85% humidity. I'm cooking in here, man. I'm cooking. All right, onward and upward. Many facets of selling premium. Selling premium can be referred to in a number of ways. And people always hear about like selling premium. What's selling premium? Selling options. Selling options. Selling options has all this different vocabulary around it, right? Selling premium, credit spreads, short call spreads, short put spreads, selling naked, delta neutral trading, even delta neutral trading. Generally speaking, delta neutral trading is associated with selling premium. So it can be used, selling premium can be used to create both bullish and bearish trades, but generally it's considered market neutral. And I just want you to know, like iron condors, credit spreads, that's all sell side stuff, right? So don't panic. I'm going to use a couple of terms, and I bring this up because sometimes I just inadvertently mention it. Now we got to talk a little bit about probability and profitability. Your trading is based on probability. Now, you and I, we can create trades right now all day long with 90% probability of success, but you can still lose money. And I'm bringing this to your attention because I've been in this business, and I want you to understand, I was in the brokerage side of the business. The brokerage side of the business, I know everybody considers the brokerage side of the business like, this is the evil guys. Please, at Thinkorswim, we brought options to the everyday retail client. That's what we did. I mean, we were the pioneers behind bringing this stuff to the masses. There would be no Robinhood. There wouldn't even be like TD Ameritrade, okay, the way it is today if it wasn't for this little startup firm. But the reality is, over the years of watching this, there's all these websites out there. They go, I am right. Me, 95% of the time. I'm just going to throw this out here. Okay. You can be anybody off the street. You want to be right 90% of the time? Give me a stock. Come on, give me a stock. You can be right. You too can be right 90% of the time. Let's go to NVIDIA. He goes to NVIDIA. He looks at NVIDIA. He opens up the option chain. He goes 73 days out just for the hell of it and pulls up something called probability out of the money. Open up a few options in here. Want to see the probability? Hey, look, I'm going to be right 94% of the time because it says I'm going to be right 94% of the time. That's a probability out of the money equation. If you've never seen them before, that's okay. But do not ever let somebody say, I am right, okay, lure you in, because that is sheer madness, and you will get killed with that, like I am right more than you. It means absolutely nothing in this business. Probability alone doesn't make you profitable. Remember that. Markets are always going to be a trade-off. Markets are always a series of trade-offs. Higher probability, higher risk. That doesn't necessarily like resonate with most people. Higher probability, higher risk. So if you want 90% probability, you may be taking a lot of risk. That's what we're going to be talking about today. You can be right 90% of the time, you can still lose money. So where can you find edge? We're actually going to extrapolate this momentarily into edge because that's what everybody's here for, right? Good, because that's what you're going to see here momentarily. This is the first example. Now, for those of you that are absolutely unequivocally brand new, pay attention. I'm going to draw on the screen a little bit. I love to draw on the screen. I want to be the John Madden of the trading world. So you got to have goals, people. You got to have goals. I want to be John Madden of the trading world. Here's a stock in the stock. And by the way, every fictitious stock that I do is called stock. Stock. It's trading right smack $50. Everybody okay so far? Stock is at $50. Do I own the stock? No. Do I want to own the stock? No. Am I ever going to own the stock? No, not in this example. I don't want to own the stock. I'm just going to go out and give you a high probability example, just to display something and to prove a quick point. We're going to go out in this example, and we're going to sell a 60 call. I'm just going to sell a 60 call. You go, can you do that? What is that? Some people don't even know what a 60 call is. And for the 60 call, I'm going to collect a $1 credit. So what did I do? I collected $1. Yay! For doing what? For selling a 60 call. Collect $1 and we call that a credit. How long do I have to sweat for? You have to sweat for 1 month. See, options are always good for a period of time. In this case, I'm just going to make it an esoteric, period of time. I'm going to make this 1 month. So for the next month, you have sold the 60 call. Now listen, some of you guys are totally and completely unfamiliar, and I'm going to stand up here because, I feel like I must communicate this to you as we go along. So, the desk is going to go up. This might go badly. See if all the cords are going to reach. Sorry, I'm driving the desk up. So for those of you that are absolutely unequivocally brand new to this, I thought I was going to be able to sit the entire time. It's not going to happen for me. Apparently, to talk about trading, I must stand up. So I'm worried about it. I got microphones, cables everywhere. Okay, things could go very, very badly here. Oh, maybe a little bit higher, tiny bit higher. Okay, so discovering probability and premium selling tactics. So here I've gone out and I've sold a 60 call. But again, some people have absolutely no idea what selling a 60 call even is. Okay, so let's talk about, first of all, what the 60 call is. For those of you that are brand new, right? What's a 60 call? 60 call, well, if you buy it, let's talk about buying it first. So from the buy side of a 60 call, it's going to give you the right to buy the stock at 60. Do I want to buy the stock at 60? No! Why am I buying the 60 call? Because you think that the stock can go where? Up. Where's the stock right now? 50. Why am I buying a 60 call? Because I think it's going to go up. How much? Really, really far. Why? Because that's why I'm buying the 60 call. So if you buy a 60 call, you would be paying $1. Paying $1 for what? For the right to buy the stock at 60. But do you really want to buy the stock? No. You just want the stock to go to 100, because if the stock goes to 100, you have the right to buy the stock at 60. And if you have the right to buy the stock at 60, you could buy the stock at 60, but I'm not going to buy the stock at 60. I'm just going to sell the 60 call. You buy a 60 call with the intent of selling the 60 call, because if the stock goes to 100, you buy the 60 call and the stock goes to 100, you're going to make $40 minus the $1 you paid. Are we okay? We okay? So somebody goes out and buys the 60 call, but I'm not going to buy the 60 call. I'm going to sell the 60 call. Do not worry about risk yet in this trade. And I'm saying that simply because I need you to understand the concept first. I'm going to sell the 60 call. Why am I selling the 60 call? I don't know, because I feel special. First question people always ask, if you're newer to this, they go, how can you sell something? You never owned it. You never owned it. You're right. In options, you have rights, you have obligations. Buyers have rights. This means buy. Hands turned toward me means buy. Hand turns away from me means sell. You have what? rights and you have obligations. If I sell a 60 call, yes, I can actually open the trade by selling the 60 call. What am I doing to myself? I'm obligating myself, okay, to doing what? To letting somebody buy my stock from me at 60. Do I own stock? No. So how can I sell a 60 call? I'm selling it naked, totally naked in that trade. So I'm selling a 60 call. Why? You get that I collect $1. I only have to sweat for a month. I'll show you exactly why. Let's get down to some of the basics over here. Here's the stock. The stock's trading at 50 bucks. Where can the stock go? Stock can stay flat. I would make money. I would make $1. Stock goes anywhere down. Okay, I can make $1. By the way, what's the chance the stock going up or down? I don't know. It's probably about 50-50, but hey, what happens if it stays flat? That would blow my mind. But if the stock stays flat, I make money. If the stock goes down, I make money. Even if the stock goes up, I might wet myself, but I'll still make money. And if the stock goes to 60, like, but think about the probability of this trade. You don't know what stock it is. It doesn't matter what stock it is, but what's the probability in the trade? I'm going to tell you right now, I think the probability is pretty good. This trade probably has upwards of a 90% probability. 90% probability of doing what? Of making the buck. $1, $1, $1. But this is exactly what I'm saying. So you make money, make money, make money, make money. What happens if the stock goes from 50 and they go, company was taken over. Company is now trading 80. You go, oh, I don't care who you are. That has got to hurt. Because you are actually what? You sold the 60 call. Stock's now trading at 80. Oh, somebody says, I want my right to buy the stock at 60. You go, I don't own the stock. You go, good. You're going to buy the stock at 80. You give me the stock at 60. How much are you going to lose? You're going to lose 20 bucks, but you collected $1. So you're really only going to lose 19. That would be a very, very bad trade. The reality of this is the trade has an incredibly high probability. All I want you to be able to gather out of here, I know what the risk is in here. I do. I know what the risk is in here. What I want you to be able to gather out of this example, okay, is how high that probability in that trade is. Are we okay at that point? Everybody okay? All right. And a lot of people immediately, they go, my brokerage firm won't let me do this. Every brokerage firm will let you do this if you know the right things to say. So there are brokerage firms that let you do this. There's even a handful of brokerage firms now, you can do this in your IRA, but we haven't gotten there yet. Okay? I want you to realize something. What I'm talking about over here isn't just a fictitious beast. You know, I always use something like Twitter. You know, whenever I give this example, I give something like Twitter, because Twitter's like, it's a little volatile. Twitter's not that volatile anymore, but let's go a little further out in time, open up a few strikes. And, you know, here's Twitter at what? Twitter's a $65 stock. So let's actually highlight a few things. Okay. Yeah, this works. Well, I'm just going to go for it. I just got stuff up on the screen that works. Look, Twitter. And look, this is a live screen and there's a lot going on on this screen. If like you've never looked, I'm actually on right now, the Thinkorswim platform. So here's Twitter. It's trading at 65 bucks. I'm opening up options that are 73 days out. And I'm just going right here. I just picked an option that was trading at $1. Look, that has a 90% probability. Done. So I sell the 80 call. What do I do then? I sit there for 73 days and I go, I hope. The bottom line is this trade has a 88% probability of expiring out of the money. Are we good? Are we good at that point? Again, it's really important to me that you guys understand at least that first example, because we're going to start to build on this logic a little bit. All I want you to understand is that in theory, you can sell a way out of the money option, And in selling a way out of the money option, you have an extraordinarily high probability, okay, of what? Of keeping, for instance, that $1. Are we at that point? Maybe, okay? Because somebody said it already too. Johnny came in here and said, you're going to make a little, lose a lot. No, you won't, because that's exactly where we're headed. So the next thing, looks like everybody's okay, all right? So selling options equals positive decay. When you sell options, every day that passes sees the dwindling of options premium. Some people know this. You sell something for $1, and then like a couple of days later, you're like, yeah, man, that thing is only trading for 95 cents. Most people, though, have done the opposite. They've been buying options. And when they buy options, they go, I'm melting. As time passes, the options that you sold actually decay exponentially. Let's take a moment to review time decay. Here is something that is going to absolutely blow your mind, okay? I am just going to throw this out here for your consumption. There are people that are attending here today that have probably traded for 15 or 20 years. And I'm going to tell you right now, options, what we call time decay or theta decay, they're taught all wrong. Okay. That most people really don't understand what theta decay is. And I'm going to tell you right now, this is for the more experienced individuals. If you're brand new, fantastic, because you haven't done anything that needs to be undone. If you're experienced, you better undo some of the logic that you think, okay, is right. What most people experience with options is, and I'm going to give you an example. You go out and you buy a call, and you're going to pay $3 for it. And over the life of that call, it kind of looks like this. And let's just say to buy the call, and it's only 1 month of time. So you buy this thing for $3, and you buy it for $3, and then nothing happens. And you look a few days later, and it's trading for 280. You go, I'm okay. I'm okay. I'm going to be okay. I'm okay. I'm okay. Look, it's only worth 280, right? I only lost 20 cents. And then like another week passes and the stock actually moves against you very slightly. You go, that's worth $2. And you go, I'm not okay. I'm starting to hurt. I really need the stock to move my favor. And then all of a sudden the thing is worth like 50 cents. You go, it's not even worth selling anymore. You go from the I'm okay to this, it's not even worth selling anymore. So it's worth 50 cents. And then eventually it goes, oh, the big donut. Okay. You're wearing a big donut out there. How many people have ever experienced that before? Oh, come on. See, nobody ever admits it. Nobody ever wants to admit the fun. This is the way that most people experience decay. They feel the burn. Okay. This could not be, though, like this decay graph couldn't be further from the truth. See, when most people learn about options decay, they are learning about decay of what they term near money options. There's actually a phrase called ATM, which is at the money. This is an at the money decay graph. This is a near money decay graph. We're not going to look at that because you know what? That crap don't work right now. It won't work. And I'm actually going to explain exactly why. So the decay graph is not what you think it is. Let's go a little further out. You guys ready? Because this is where it gets interesting. Oh, like 3 people are willing to admit they're like, I got burned. Yeah, I'm okay. I'm not okay. Discovering probability and premium selling tactics. All right. So now we're going to move into a $100 product. Now I'm going to give you a theoretical and then I'm going to give you a real example, right? So in my theoretical example, now we're going to go out. Okay. We're going to get crazy. I'm going to go all the way out. Ready? 3 months. 3 months. You go, what are you, crazy? Yeah, I'm going to sell something 3 months, but I'm going to sell it super far out of the money. Super far out of the money. And by the way, I'm using calls today because calls are just easier to understand than puts. For a lot of people, I go, if I sell a put, you go, you're selling somebody the right to sell you stock? Yes, that confuses me. I go, okay, let's just work with calls. So there's no reason that I'm just using calls other than it's easier to interpret. We're going to go out and we're going to sell a 120 call. And again, I'm just going to collect exactly a $1, look, $1 credit. So I'm going to bring that down here again. We're going to sell 120 call, collect $1 credit. Okay. First and foremost, you do realize stock's at 100. This is the 120. That's 20% out of the money. That's like the nosebleed seats. You're so far away. You're like, is that a football they're throwing down there? No, it's a call. You sell a 120 call for like $1 credit. Now what do? You go, I do nothing. Can you do nothing? Yes, everybody's doing something. Now I'm doing nothing. So the stock right now is at 100. Do I own the stock? No. Do I have intent of owning the stock? No. Why don't I own the stock? I don't know. I don't really want to tie up $100. What can the stock do? It can go down. If it goes down, I keep my buck. It can go up. If it goes up, I still keep my buck. It can come all the way up here to like 118. You realize how high the probability of that trade is? That's a really, really high probability trade. So why am I doing this though 3 months out? Why 3 months out? Because that is where Ultima is. That's where the juice is. What's the juice? That's where the premium is. See, people, they look at this business, okay, and they still have like, this decades old garbage stuff. Like nobody sits down and figures out mathematically, like what would really be the best option right now to be able to sell? What would be the best option to sell? You're going to find out here momentarily. Want to see? Okay. This is all about how to generate monthly income. Does it matter whether you sell an option 30 days or 3 months from now? Because if it's 3 months, you're like, I'm going to have to sweat for 3 months. I don't want to do that. Listen, the whole business, get in, get out, make a decent profit, get hedged, which means duck and cover, right? You don't want to take a large loss. I'm going to show you exactly how to do that right now. Let's actually go over to a live trading application. In the live trading application, forget using a fictitious symbol. We're going to go right to the spiders, the mother of all products. The SPX is really the mother of all products. And this is like, you know, it's child, but the spiders. Everybody's got to know the spiders. Why do you have to know the spiders? It's the most prolific product in terms of volume every single day. Spiders is already at 3 million contracts today. There's still a lot of time left in the clock too. That thing's going to do 4 million contracts today. Sweet. We're going to go into spiders. And just to overemphasize this example, I'm going to go all the way out to December. And I'm going to open up every single option in here. So what are we doing over here? We're getting crazy. Okay. We're going to get crazy. We're going all the way 101 days out. Okay. And I'm going to scroll way out of the money. And I'm going to find me an option. Okay. That's right around $1, and I'm going to sell it right there. There it is. Yay. Why did I pick that option? I'm just going to throw it out there because I said it was trading around $1 because in the first 2 examples, my option was trading for around $1. So I figured I should be consistent. This is trading around $1. And the irony is it has about a 92% chance. So let's go ahead and let's elaborate on this particular example. Now, what's the name of the game? Make money monthly, right? Extraordinarily high probability trade. Do you want an extraordinarily high probability trade? Absolutely, everybody does. But the key is not the extraordinarily high probability trade. The key is not what? Not getting killed. How do you not get killed? Well, let me actually show you just that. Okay. And most people do not see it yet. They don't understand why I'm this far out. So I'm going to come out here. We're all the way in the December expiration. And in this case, I'm going to sell, and I'm writing on the screen, okay, the 490 calls. And I'm going to sell them for a $1, okay, credit. That's it. The trade is now done. This is my example. Don't worry, it's going to get better as we go on, but I need you to understand this very humongous concept. It's not a small concept. It's the mother of all concepts because people have premium selling wrong right now. So you're going to sell a 490 call. Now what do you do? What's this option going to be worth 30 days from now? 30 days from now, what's this option going to be worth? Okay, let's go look. So to figure out what this option is going to be worth 30 days from now, I'm going to assume all factors held equal. I'm not going to move the stock. I'm not going to do anything. All I'm going to do is I'm going to jump forward and I'm going to look at the November options. Now the November options have 73 days left. Okay, so we're going to jump from a 101-day option, but then we're going to look at the 490 calls with only 73 days left. What that's doing, it's like fast forwarding in time. This is under 30 days. How much can you make in 30 days? How much can you make in 30 days? Because you want to learn to make monthly income. But everybody thinks if you want to make monthly income that you have to sell options with 1 month to go, which is absolutely ridiculous. It's ridiculous because that's where the risk is right now. And I'll show you. You want to come out here and open up this November option. You want to look at the 490 calls. Go look at the 490 calls. By the way, I have positions in here too. So go look at the 490 calls, 490 calls, 490 calls. There they are. Okay. So exactly under 1 month from now, 1 month from now, even if the market rallied, we'd still be fine. We're going to turn around and we're going to buy the 490 calls. We're actually going to buy them back. Let's just put it, let's get crazy. Let's say it's 40 cents because I rounded the other one a little bit up. So I'm going to round this one up as well, 40 cents. What if I actually made them there? 60 cents or 60%. I've made 60% in less than 30 days on an option that is almost untouchable by the marketplace. You know, that 98% probability, that 90, whatever, 96% probability, when I initiated the trade, I had a 92% chance. But that was a 92% chance between now and 100 days from now. I'm not holding the trade for 100 days. I'm holding the trade for 30 days. This is a grand slam home run. You're making 60% in less than 30 days, and you're not taking the extraordinary risk. How is that possible? It's possible via Ultima. Again, most people don't understand what Ultima means. I mean, people are out there and they're selling options with 6 days to go to expiration. Good luck to you. It's 11% volatility. You're already dead. Nobody told you. Dig a grave because you're already dead. Premium right now is in the back month. Premiums in the back month and retail is all over it. Okay, at least they should be, because there's huge advantage of back month premium. Why sell options so far out in time? Again, you may have noticed in my example that I went out 3 months in time. Typically, traders sell short-dated options, but that's why people are actually tuning into this today, because this is the criteria. This is the nuance. This is actually what Ultima really means. I mean, that's what we do here at Theotrade. Theotrade's not an education firm, okay? We're a think tank. Think tank that goes out and actually studied this stuff. Most of us actually do come from the brokerage background. A few of us, from the professional trading world. We get together and we trade, okay? But we absolutely also build course structure and criteria specifically around these little nuances, right? This is what people have got to learn. But I'm not done yet, because those of you that have actually sold some premium, all right? Okay. I mean, Theta is a very, very good thing. This is a really powerful thing. But people get into this notion like high probability. This is what I call 90% probability and the 10% hammer, because 90%, it sounds great. But 10% of the time, the market's just going to rip your face right off. And if you've never heard that term, it's because you just haven't been in this business long enough. When you trade really, really high probability strategies and you're wrong, you can get hammered. And I'm going to tell you exactly what people do. Now, listen carefully. If you've been around the block and you've traded a little bit, you've probably heard a strategy called an iron condor. An iron condor goes out, it sells a call, and then it sells a put. So you're selling out of the money options. Woohoo! You're selling them naked, but then you're buying a call further out of the money and you're buying a put further out of the money. So the risk graph looks like this. Right? So that's the risk graph, like this. Wait, I got to put the hands like that. That's the risk graph for the iron condor. And you learn this in some education, whatever. So you go out and you sell an iron condor. You know what happens when you sell an iron condor? Lo and behold, you sold an iron condor, and that baby had a 90% probability, and it did exactly what it's supposed to do. It made money. So you just made money. Yeehaw! And you're like, yeah, I'm going to do that again. So the very next month, you go out and you sell another iron condor. Guess what? Holy crap, that worked. So that's month number 2, and you've actually banked profitability in month number 1. You've banked profitability in number 2. Now you're squawking your feathers a little bit. In month number 3, you step up. You were trading 1 lot in the spider, Captain 1 lot, and you're wearing your little cape that says Captain 1 lot. By month number 3, you step up into a product called the SPX. What's the SPX? 10 times the size of the spiders. You think I don't know this? I watched brokerage accounts for 15 years, people. So you 2 months, and all of a sudden you're the next Warren Buffett. You step up into the SPX. The SPX is the equivalency of a little leaguer stepping in, okay, to a Major League Baseball game where they're whizzing the ball by your head at 105 miles an hour. But you don't know that. 3rd month in the SPX, holy hot damn, you actually made money in the SPX. By the 4th month, you're doing 10 contracts in the SPX. And the marketplace, like, it knows this. Like, the marketplace is evil. It is the entity of all entities. It goes, come on, come on, come on. It draws the contract size out, and it allows you to make money. And on that 4th time, it goes, we got one. You do 10 contracts in the SPX, the market moves huge. You absolutely get wiped out. Not only do you lose everything you made in the previous 3 months, but you lose half of your brokerage account. You go, oh, what happened? It's a complete train wreck. Complete train wreck. And I put this on the bottom of the slide. It's like, oh, I know. It's like I can see your account. I could for 15 years. I've seen every person do this through high probability trades. It is ridiculous. You watch people losing and you think this is like, oh, a couple bucks here, a couple bucks there. It's billions. We had 7 million accounts at TD Ameritrade, of which I actually studied, all right, a slice of about 250,000 heavy option traders. unthink or swim. We knew exactly what they did. We'd see they make money, make money, make money, make money, wiped out. And we're like, please just don't do it again. It was an absolute train wreck. And then they think to themselves, there has got to be a better way. Has anybody ever done this? Anybody ever done this before? No, nobody's ever been through that. The iron condor debacle. Okay, come on. And again, admitting it's the first step. I love, like, always one person comes out, they're like, me. There's a lot of people on today. Me. It gets better. I'm going to tell you the rest of the story. You know what the rest of the story is? After you get train wrecked, you think to yourself, it's my fault. I did something wrong. And people convince you of it too. They go, you didn't fix the trade? Fix is a really, really dirty word. I know I can fix it. This is where you start heading down the path of degeneracy in this business. Fix, again, a very dirty word. 15 years in the brokerage business. I'm totally a cynic on good trades got bad. All people do is just get out a shovel and just keep fixing the trade. Fix, the very notion of fixing a trade means more capital exposure into an already piss poor trade. What's the first thing you always learn in this business? Don't throw more good money down a very bad hole. So if you're going to fix a trade, the very notion of fixing a trade, more money, more transaction costs, more money, more transaction costs, fixing a trade. Listen, a fix can work, but the very notion of going out and trying to fix a trade throws good capital after bad. It's like the first thing they teach you in the professional side of the business. You ain't going to fix anything, kid, because why would you ever go out and try to fix something that's already broken? You know, and the exact analogy that was given to me is this. You got to toss trades out like yesterday's trash. You got to take a car, and I want you to think about this analogy. Take a car and just drive it off of a cliff, preferably you not in it. Take a car, drive it off a cliff, and bring it to a body shop. Like, you know, this thing is an amalgamation at this point of crap. And you're going to bring it to the body shop. You're going to go, okay, you fix it. They go, what? There's nothing to fix. It's a block of metal at this point. This thing is screwed up. I mean, what do you want me to do over here? We're going to pay more to fix the car than the car is even worth. Okay, it's a piece of junk. Let it go. And so is your trade. You got to do this right. You got to learn how to correct good trades gone bad. You got to learn that it's not about correcting the trades. It's about position structure. Now, let's actually get into really what we do here at Theotrade. Okay, so here at Theotrade, we do go out and we sell premium. And we sell very, very heavy amounts of premium. But there are three absolutely critical components to your success in the sale of premium, okay? And I'm actually going to list them right up here, right? So 1, 2, 3. The first one over here is actually termed, okay, a risk twist spread. The second one is what we term a VIX vol spread. And the third one is what is termed a gamma iron. What are those three things? Those collectively, that's the hedging properties, okay? Welcome to hedges. When do we hedge? We always hedge. How do we hedge? Through a risk twist, a VIX vol, or a gamma iron, or a combination of the three. Why do we hedge? Because sooner or later, the crap is going to hit the fan. It always does, and always will, and always has. You know, if you think that just going out and selling options premium makes money, you got another thing coming to you. It's a very efficient marketplace. There is incredible amounts of edge, but most people cannot sustain positions long enough to ever see that edge come to fruition. Why? Because when things go bad, they go very bad. And when things go very bad, you barf the trade right up. What that basically means is you close it. Let me explain what these three trades are kind of in context. Here is the spider, okay? And again, we're going to do this example right on the SPY. And the SPY is trading at 450. I know it's at 452. I can see it on this screen. SPY's at 450. I'm going to go way out here and I'm going to sell the 490 calls. I don't care. Let's say we collect $1. I'm going to sell some 490 calls. Consequently, I'm also going to come all the way out here. What are we at? 450. So I'm going to sell. You're going to love this. I'm going to sell all the way to the 350 puts. Now, we didn't even discuss puts. By the way, in puts, you're going to collect about twice as much. So in the put, I'm going to collect almost $2. So go out there and sell a call and sell a put. Then what do? I go, I hope nothing happens. I never do that. I hope nothing happens to me. You're going to hope nothing's happened to you. Nothing will happen to you for about 10, 15 times. Maybe you get away with it 20 or 30 times. Let's get crazy. Maybe get away with it for 2 years. But sooner or later, the market, thing's always going to come home to roost. Why? Because it knows what you're thinking. The marketplace is the entity. It's the all-seeing, all-knowing entity. We're going to go out, though, and I'm not just going to sell the 490s. I'm also going to go out there and sell, for instance, the 500s. I'm going to come in here and sell, for instance, the 480s. I'm going to be collecting $1. As the market moves up, I sell a couple calls. The market moves down, maybe sell a couple puts. Look, I'm going to go out there and I'm going to sell some 330s. I'm going to come in here. I'm going to sell some, for instance, 365 puts. You're like, Don, you're making a mess. I'm way out of the money. So far out of the money, I can't even see these trades. Then what do? These hedges are already in place. As I said, when are the hedges on? They're always on. Where are the hedges? Hiding in the backdrop. When do you need a hedge? You hope you never need a hedge. So why do you put the hedge on? Just in case you need the hedge. Where are the hedges on? Always. I'll just keep going in a circle. What does a hedge do for you? I'll tell you exactly. Let's start with the VIX volatility spread. VIX volatility spread to me is the easiest thing to visualize. What's the VIX? The S&P 500 volatility index. If the market goes down, the VIX goes boom up. So if you have a VIX vol spread on, what do you think a VIX vol spread does? It explodes in value when the market crashes. So here's the spiders. If the spiders crash, the VIX spread comes in here and all of a sudden puffs up in price. Now you go out and you buy these hedges. What do you have hope to have happen to the hedge? I hope it goes out worthless. I hope to never use the hedge. So why do you buy the hedge? Just in case I do need the hedge. So what's going to happen is if this marketplace comes tearing to the downside, and it will sooner or later come tearing to the downside, the VIX vol spread puffs up. It gives you more than enough time to be like, whoo, that was close. You could have a week where you could actually exit positions if need be, or you can even sustain them because the VIX vol spread has got your back. It's not going to cover all the losses. It's not intended to cover all the losses. Hedging is just shaving off layers of risk. Hedging is keeping you sane, okay, in an insane environment. The risk twist spread's the same thing. A risk twist spread, okay, that's like a sledgehammer. I mean, it's like a 20-pound sledge of hedging. Then people go, whoa, what do I do to the upside? That's where your gamma iron comes in. You know what a gamma iron is? It's actually a buy-side iron condor. It's what they call an inside hedge. So what I do is I'm literally buying an inside hedge. If the market bursts to the upside, the gamma iron actually makes money. The gamma iron has to make money before you can take losses out here. So what it does is to puff up hedge if we actually fly to the upside. And what you basically have, okay, in effect, is a hedged environment, okay, in what could be a very, very wild market world. And that's what we do is we use a combination of hedges. It's not about like one trade. I'm going to build a little position. And if this is the first time you're tuning in, you're like, this is complicated. It's not complicated. You know, you realize you can go out, you could put on literally three trades, and you're selling options premium and you're doing it the right way. It's with Ultima positions and anybody can do this. You get $2,000 in your account, you can now do this. And people don't realize that there are brand new products in this business that let you do this trade, okay, in an IRA. You can do this exact trade in your IRA, totally and completely the same way I'm showing you with as little as 3 trades. I take it to the extreme. I manage a lot of capital this particular way. So, and by the way, no holds barred. I'm going to show you everything that I do. This is what you want to learn right now. There has never been better edge than right now because it's about skew. It's about implied volatility. This is why you want to sell premium. Premium can be sold in a small account, even under $5,000. Actually, rules state you have to have over $2,000 in the account. In an IRA, you got to have 5,000. The rules state $2,000 in your account. You go, I can't do anything with $2,000 in my account. Really? You can. You absolutely can. We're not day trading in here. And even if we were, it wouldn't make a difference because you can even circumnavigate the day trading margin restriction. Produces positive theta decay, right? That's what selling options may enhance existing positions. You realize you could sell options in very large quantity against existing positions, provides an incredibly high probability of success. 95% of the time, you do nothing. Those hedges are there for a very rainy day. Rainy days are going to come, but they're not going to come that often. Most of the time, your hedges, they do nothing. You go, why did I buy my hedge? You bought your hedge just in case, and you'll figure that out real quick. Always, okay, have thy hedge on, or eventually lose your head. Never need to buy or sell the stock. And you can be wrong on market direction and still produce profitable trades. I'm wrong all the time in market direction. This stuff is way, way out of the money. I'm telling you right now. Everybody looks at the marketplace today and they think the exact same thing. And I'm reading some of the comments in here. And I stress this time and time again. Okay. It's hard to tell people that you need this right now because all you see is like my 401k just keeps going up. You know, I could just blindly buy a stock. The market always keeps going up. Yeah, until it doesn't. So you realize the Fed's no longer on your side. So you realize we've already seen what? Trillions and trillions of dollars flood the economy. We think it's going to last forever. I know some of you do believe it's going to last forever, but it's not. Okay, they're already talking about inflation. So sooner or later, they're going to jack interest rates. I don't think they're ever going to touch interest rates personally, but the Fed is not going to be as accommodative. And when they're not going to be as accommodative, how many $3.5 trillion spending bills do you think are going to be done? Okay, in terms of, again, there's monetary stimulus, which is the Fed, and then there's fiscal stimulus, which of course is the administration. They are fiscally stimulating the economy. Okay, it's as good as it gets. You better remember that. And as soon as they actually say, no. Okay, we're not just gonna keep throwing money, okay, at the problem here in monetary stimulus. You're gonna need this. You're gonna have to have this because volatility is gonna explode in the marketplace, especially when everybody realizes things don't always go up, right? Selling premium can really bring in some consistent returns, okay, while minimizing your risk. If you'd like to learn how to do this, okay, minimize your risk the right way, we're in a moment here going to discuss criteria. Criteria is the nuts and bolts behind this. Before I get to criteria, before I get there, I'm actually going to show you live trading examples. And I'm actually going to take you through, like, because people always want to see, like, how does this really work? And with that, I am also complete and utter full disclosure. Anything I do and everything I do, this is a portfolio margin account. Okay. Anything and everything I do, I show a full account status. These are all live brokerage accounts. There's hundreds of thousands of dollars in here, carrying millions of dollars of positions. We show everything. And I don't say I'm carrying millions of dollar position. I have capital. I put the capital to work. I'm not just here at Thinkorswim. I'm also using Tastyworks. This is an IRA. This is an IRA. And again, it's no holds barred. Like, we show every detail of every position. The reason I'm saying that is because I'm going to show you a couple of trades right now, a little bit more than a couple of trades. I'll run through them quick, I promise. Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts. And I've reiterated that a few times. I'm going to start off very, very slow. Okay. This, if you look at this, what this Tesla short call is, okay, you're like, well, why is it printed like that? I'm going to tell you exactly why it's printed like that, because that comes from here. This is just 90 days back, right? Let me actually open up a few more days in here. We'll actually go back 360 days. So I'm just going to go back 360 days. I'm going to show you what I did in this account, for instance, okay? But instead of you sitting here trying to match up, here's the opening trade, here's a closing trade, here's an opening trade, a closing trade. I'm going to show you broken down like this in the slide deck, okay? So the first one I go slow with, but I'm going to show you literally everything I've done in terms of premium selling, everything I've done in premium selling since the beginning of the year. Forget about, like, I know you're like, wait, he's back in 2020. Yeah, I'm back in 2020 because I wanted to give you an explanation here. So this is the exact date and time. All right, literally the date and time. Most of the time I'm actually on, I was going back and forth between Pacific time and Eastern time. So I do apologize. Some of the times might be a little bit funky. This is Tesla. This is the actual call that I bought or sold. This is the opening price. This is the closing price. That's the return. You guys ready? Because we're going to fly through. Okay. This is everything I've done in this account in premium selling. Here's another Tesla short call, 90% return. Tesla short call, 58% return. And I just threw Tesla up there because I wanted to warm you up. What did I warn you? What did I want to warm you up to? I wanted to warm you up to the idea I could be dead wrong in direction. Tesla was rallying massively at this point. I'm out there selling calls. Sold. I sold a call. The market ran up and still made money because it has to do with volatility right now. Volatility is just jacked. It was an inverted volatility skew. Here's a bond short put. Some people go, I've never traded a bond. That's okay. Why not? 57% return. I just figured I'd show you, hey man, you can sell a bond in here, 57% return. Ready? Because here we go. Here is a bond put, 57%, 53%. Okay, IWM short call, 62% return. Every single trade that I'm showing you here can be done inside of a retirement account. Every single trade I'm showing you here can be done in a regular brokerage account as little as $2,000, right? There's variations of this. So I open the trade, close the trade. IWM short call, 53%. Tesla short call, 76%. SPY short put, 60% return. SPY short put, 50% return. SPY short put, 51% return. Now we're starting to bridge our way from January into February. SPY short call, 57% return. SPY short call, 49% return. SPY short call, 50% return. QQQ short call, 62% return, 53% return, 50% return, 50% return, 64% return, 53% return. Still in the QQQ over here. QQQ 57% return. IWM short call, 56%, 50%. Okay, 54%, 19% loss. Come on, you're waiting for a loser. You got one. This was the most wild product. If you looked at the IWM, it's the Russell 2000. Okay, take a quick glance. Right here, this move was absolutely, okay, that move was spellbinding. It was incredible. It was one of the most incredible moves we've seen. Ironically, we've done nothing since. We rallied up here 21% first few weeks of the year. And I got caught up in it. I took a 19% loss. But you realize how many 50%, 50%, 50%, 50% like, gains I've had. Take a 19% losses. To me, a 19% loss, that's the best loss you're ever going to take. 54% returns, 52% return, 49% return. IWM short put, 47% return, 49% return, 51% return, 50% return on a short call. See, bonds are back to short calls. IWM short call, 54% return, 51% return, 50% return. SPY short call, 50% return, 53% return. Bond short put, 50% return. IWM short call, 51% return, 50% return. Okay, 52% return on a short put. Every single trade is in here. 53% return on a bond short put. Okay, bond short put, 73%. 59%, 56%, 52%, 50%, 51%, 50%. And I'm just ripping through them. Tesla short call, 53%. By the way, feel free if you ever want to see any of these trades, we can give you all. I don't care. It's completely open book. It is every single trade that I have done, okay, to sell premium. Amazon short call, 63%, 50% returns, 53% return, 51% return, 50% return, 55% return. Oh, SPY short put, 51%, 51%, 50%, 52%, 50%. Oh, wait, time out. Here's actually where I switched up. This is a SPY short put, but at this point, okay, we had a lot of clientele here at Theotrade, and they said, let's put some size to this. What size mean? I wanted to do a bigger trade. So we wanted more size. So we moved into the S&P options on futures. Why did we do that? The S&P options on futures, because they're five times the size of the spiders. So now I'm actually doing a big boy trade with a 50% return. Okay, here's another one, 50% return. 51% return, QQQ 51%, ES short put 51%, ES short call 50%, okay, 51%, 56%, bond short call 53%, SPY short call 50%, bond short call 54%, bond short call 50%, 58%, 54% of QQQ short call. Now we're getting a little bit more recent, 56%, 31% short call, okay? This is a Christmas tree trade, and this one is the mother of all trades. This is an 85% return. If you're unfamiliar with it, it's because the skew is absolutely massive. QQQ short call, 57% return. TLT short call, 53% return. ES short call, 55% return. I've got a lot of inventory on, but I wanted to take you pretty much into almost current weeks, right? I wanted to show you basically everything we've done in terms of premium selling. There was a losing trade in there, okay? There have not been a lot of losing trades. We haven't had a tumultuous sell-off in a really, really long time. The tumultuous sell-off will come, and when it does, we're going to be hedged. Why? Because we're waiting for it. And that's what we have. The risk twist spread on. We have a VIX volatility spread on. I mean, this is what we do over here. When I say like, oh, are you sure that you have a hedge on right now? Of course, I'm sure I have a hedge on. All I have to do is go in here, okay, type in VIX. I guarantee I have VIX trade on. There it is. Okay, there's the VIX volatility spread. It's on. Why is it on? Just in case. Just in case what? I don't know, in case the market crashes. Because if the market crashes, this thing's going to explode. Save me, VIX. And that's exactly what it's designed for. Okay, it's going to be your savior sooner or later. I don't know when that's going to come. Listen, this is a phenomenal time. You got to get in and you got to start learning this before the marketplace really starts to turn, because when it turns and it gets really volatile, stuff's going to be a little harder to learn. All right. This is a skill set that's going to last you a lifetime. Premium selling, okay, has worked decades and decades, but you just had to shift with the times. When are you ever going to have time like this again? And I say that simply because some people are still working. Okay. So this is very, very part-time, but at the exact same time, there's a lot of people that are not working. But the reality is a lot of us are actually working from home. I've always kind of worked from home. Even when I was actually at Thinkorswim and TD Ameritrade, I worked from home. So I'm kind of used to it. But most people, they're working from home. They're still doing stuff on buy another computer monitor. So if you're quarantined, this is also a great way to emerge stronger and in great financial shape. And you think, quarantines are over. Okay. My best friend actually lives in Australia. They're not over, right? They're very much present it depends upon what area of the world is, but this is a phenomenal time to learn this. Listen, what our members are saying. Mike Phipps, I want to thank Don Kaufman and Theotrade for doing a great job. Stefan, I really think Theo is the best educational money I ever spent, right? Listen, you don't have a huge amount of time. It's not a problem. Each and every trade that I showed here today was displayed live at Theotrade. What I'm saying is the trades I just showed you, the reason I say it's a completely open book. It's full Monty here, people. All right. Not only do we show you this trades, we give you access to a portfolio that have all the trades in it. Right. We even have videos that come out on a weekly basis to update you to make sure that you have expressly those trades on. Trade results we're showing are also perfect for part-timers. You sell the position, you walk away. Most of the time, you're doing absolutely nothing, but you have to have those hedges on because selling premium is hands-off. You can even use set it and forget it order types, which is what we call GTC, that's good till canceled order types. Even a fraction of your time is enough to see really good results. So you got this GTC order, which will literally buy back and close the trade when you hit your profitability point. It's extraordinarily part-time, and I couldn't think of a better way to emphasize this than a person that was literally glued to their screen. Characteristics of selling Ultima Premium. The attributes of this and high probability trading are undeniable. So you never have to buy or sell the stock. The risk is limited to precisely your comfort level. You don't use a stop order, okay? Vary time frames, minimize your risk. Minimizing risk, if you guys haven't picked up on that, that's the critical component over here. Probability of profit is incredibly high. It's a perfect strategy to also enhance a portfolio. So some people say, I don't need this, man. I got my 401k. You realize 401k, you can't sell premium in the 401k. Can't sell options in the 401k, but you can do it in your standardized brokerage account. So you can sell here against the portfolio that's here. So you should do this, and you should do this against your portfolio because it's going to bring in extra income. It's like a giant covered call, if you will. It's also an excellent tool for those seeking returns to be able to build a smaller account. Speaking of which, new products allow for the sale of options in nearly any account size. The rule really states you have to have over $2,000 and you can do what you want, but you can sell options. Okay. Everybody can do this now. Building a portfolio of options. If you're brand new to this, again, you don't let the options portion of this intimidate you. And it really does for some people. Like, I don't know. Some people are just bent against like, I never want to learn this. Listen, everybody right now is trading options. Options are doing 40 million contracts a day. Selling premium, though, you got to understand it could be done for minimal credits, but minimal risk. But the sale of premium, it's like bringing out like the power saw. Like you got to understand this is extraordinarily powerful strategy here. If you wanted to go out, you wanted to cut down a tree, you can get a handsaw and probably spend all day cutting down a tree. And it's really, really dangerous. Even with a handsaw, it's dangerous. Or you can get a humongous chainsaw and obviously chop that tree right down. A chainsaw, though, if you don't know how to use it correctly, you'll lop off a couple of fingers. Options are the exact same thing. Options are literally the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you don't know how to use them correctly, you can chop off a couple of fingers. You have to learn how to come in here to be effective. You got to learn what, all right, you're looking at, what Ultima is, and some of the specific criteria. Listen, you can sell Ultima Premium, right? Maybe you know nothing about options, limited experience, right? You need these strategies though for the foreseeable market future. Because I always ask the question, what are you gonna do when this marketplace does change? What do you mean, what does it change? When it starts to, go the other direction. What direction's that? Down, okay? You go, it's not going down. It's been going up since 2009, baby. We're going all the way to the moon. And the moment you get comfortable with that, right, you're going to start thinking like literally, like there's footsteps in the back of your head. They're like, it's coming for me. Listen, you're going to have to learn a skill set to survive this business. You're going to need these strategies because to be frank with you, what are you just going to get short, or better yet, you're going to be like, I'm the guy that's going to find the next stock that's going to go up. The correlation right now in markets is almost 100%, meaning that if we go down, everything's going to kind of go down with it. There's always something that goes up. Do you have any idea how hard that is going to be to find? Like, this is a marketplace that it's going to be unrelenting. I mean, you got kids coming out of like, high school that are in mom's basement buying AMC and they're making, $1 million and it's gone like that. Like we've seen this movie before. Now I lived through, 98, 99 and 2000. That's when I traded. I traded in the Yahoo pit at that time. And I'm telling you right now, okay, things are going to change. And when they do change, you're going to have a skill set behind you. And that's what Ultimate Trades is. Okay. We can show you how. We can show you when to sell premium in a matter of a few hours. Theotrade creates detailed recipes for every strategy, including Ultima Premium. And I always bring into your attention, like you wouldn't bake a cake without a recipe, so why trade without one, right? This is what you really need to know to successfully sell Ultima Premium for a living, right? You need to know, first of all, what underlying stocks, indices will make the best Ultima Premium selling candidates. What did you see me use? What did you see me use? Okay, anybody? 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 What products you see? You saw me use the spiders? IWM QQQ, spiders, IWM QQQ bonds. Then I went over to the S&Ps. I use the same stuff, a little Amazon, a little Tesla just for flavor. You realize if you go into something like AMC, you're dead. Dead. You don't want that kind of risk. It's insane. Because I can tell you right now, you have to have a certain volatility. The volatility has to be right inside the sweet spot. That's what Ultima is. What volatility should I seek out? What options expiration do I select? I love to bring this to people's attention. If you haven't looked at an options chain in a while, I'm going to bring up the SPX. By the way, I love the SPX. I love talking about the SPX because the SPX is the biggest, scariest animal in the entire street. Look how many expirations there are. 0, 1, 3, 6, hike, 8 days, 9 days, 10 days, 13 days. Oh, look at how far out. I mean, this is insane. Look how many options are listed on the SPX. Do you know in all those expirations, and there's like literally like 50 expirations, you got to zero in on the perfect expiration cycle. So not only do you have to know what expiration cycle, you got to know the right volatility, the right expiration. You got to know the exact delta of the option I sell. What's the delta? Delta, delta, delta. You got to know the exact delta of the option to sell. You got to know what options do I buy. That's the hedge. That's, we were talking about earlier, like the gamma iron. We were talking a little bit earlier, about a risk twist spread, about a VIX volatility spread. You got to learn how to do this. How do I actually build a position? It's an easy enough question. Sell a little here, sell a little here, buy a little hedge here, buy a little hedge here. Like, how do you actually construct the ultimate position? That's exactly what we talk about, right? Do we need a large amount of capital in my account to do this? No, we keep mentioning that and keep mentioning that because people get kind of turned off like, I can't do this. You can do this. And most people are not aware. Even experienced traders have no idea. New products came out and they're liquid. New products came out and they're liquid, and you can now sell options premium with $2,000 in your account. Okay. And there's no day trader margin rule. There's no day trading margin rule if you know what products to use. What is the right amount of risk for me? We can actually fine tune that. We can actually help you fine tune that. What are the percentage returns supposed to be? What was the most frequent percentage return that you saw in there? Okay. Anybody? What was the most frequent return that you saw? 50%. You're right. 50. because we make 50, and we make 50% and 50% and 50% and 50%. Sooner or later, you're going to take a loss. It's okay, because 50% happens very, very frequently. How do I protect myself from market crashes and selling options, risk twist spreads, VIX volatility spreads? Let me show you exactly what we do here at Theotrade. We create recipes in trading. Trading is always answering like the what ifs. Like one, it doesn't matter if like you understand this business, you're going to have to understand what if. What might be a good stock or ETF candidate for you to sell premium? What's the correct options expiration cycle? How much capital do I commit? What strike price options do I sell? What strike price options do I buy? How can I limit my risk? Theotrade has your answers. We build recipes with very definitive criteria. We have checklists for each strategy and each unique variable you're going to encounter. Let me explain what a checklist amounts to. The whole logic of the checklist comes from, well, me flying around the country, but I'm 24 years old and I'm jumping around the country constantly. And I'm trying to think of a good way to like, well, how can we actually deliver the right trades to clientele? And the idea basically, I'm sitting up towards the front of an aircraft and I'm literally watching the pilot go through, and it was old school too, and I was 24. It was like them literally going through an actual checklist, and I'm like, oh, I got it. So if you're a pilot, I definitely stole the idea of the checklist directly from you. They go through a checklist, a pre-flight checklist. They like literally like sometimes walk around the aircraft, they're like hanging on the engines and so forth. One of those things fall off, I'll never be the same again. But they actually do a pre-flight. And then while, you're actually thinking about this, once they get the aircraft up in the air, what happens? 95% of the time, they just sit there and they're like, you want to play a game? They're like playing cards up there. They got iPads in front of them. Shh, don't tell anybody. Okay. I mean, they literally just sit there and the plane pretty much does its own thing. Why? They got a couple of hedges in place. They got autopilot on there, right? That's like you're good till canceled order over here. And then you get 5 minutes of sheer, terror when the marketplace crashes. And, but we have each unique variable laid out. What if it go up? What if it go down? Like this is what we do here at Theotrade. We literally have like a flow chart where you go, we crashed. What happens? And you go flip to the next page. And the next page it goes, market crashes. Do you have your risk twist spread in place? And of course you do. This is what you follow. That is what we do here at Theotrade. Theotrade is the answer to your questions. We'll give you the right probability. We'll give you how many option contracts. When do you actually close the premium sell? What if we sell off big? Do you bail out of the trade? What if dividends are coming? Expiration is coming. What if we rally massively? Can I fix losing positions? This becomes the how, the when, the why, at what price. And in telling you right now, this is just the beginning of the variables that you're going to face while selling Ultima premium for a living, right? You can read. And I say this to everybody, you can read about what selling premium is. You can go Google right now, selling Ultima premium. 10,000 pages will come up about selling premium. Not one of them, okay? Not one of them is going to tell you how to actually build the trade, meaning like, oh, you go sell this. You sell. Yeah, how about we tell you exact expiration, exact criteria? We'll zero in exactly the number of days to expiration, what the delta should be, what the probability of the trade should be, how many contracts do you do to versus the account size. Literally, we get down to how to physically execute the trade. Spent 15 years in the brokerage world. We know how to execute trades. Listen, a lot of people might know how to build a few trades, but they don't have, okay, and you need Theotrade's recipe for success. This is just me. I have 20 plus years trading experience. When I say it's just me, Theotrade has 7 other full-time instructors. One of them is a professor of finance at Loyola in Chicago, which I'll mention here in a minute, okay? I had access to client order flow for 15 years, but so did many of the other instructors here at Theotrade. I've viewed and studied millions of trading accounts, okay? There are, again, a handful of people in the entire world that have ever had access and studied order flow to that level, because I ran education at both Thinkorswim and TD Ameritrade for the better part of 15 years. And we had at the time the largest option order flow in the industry. This is where these recipes come from, okay? This is where we built criteria, and criteria is your recipe for success. The following strategy, Ultima premium selling and corresponding criteria, requires the utmost attention to detail. Literally, you have to be able to go through the checklist because we spent years fine-tuning this trade setup and the criteria. And when we approach the section, okay, on criteria, you follow the steps to be able to build the trade. we built a 5-hour course expressly on Ultima income generation. And before anybody looks at this, they go, it's $497 for a 5-hour course. I'm going to tell you right now, okay, we have some pretty spectacular incentives. And I tell this to people right up front, because usually when I bring this page up, they go, people have gone out, and I tell this right now. I watched everything that's gone on in this education industry for the better part of now 20 years. People go out and they charge $500 for the class. Then you got to pay $500 for an indicator. Then you got to pay $500 for a class to learn how to use the indicator that you bought to go with the original class. And before you know it, it's all obsolete. And you have to buy another $500 class. Have you been through that one before? It's ridiculous. Before I even go any further, I tell everybody right up front, what we do here at Theotrade is in contrast to anything you've ever seen in this industry before. We give you everything you're ever going to need to trade, to invest, to be involved in the financial markets, okay? We are in stocks, we're in options, we're in futures. We even get into currencies, okay? We've even got traders that understand, all right, again, about crypto. So it is not just a one-trick, pony over here where we're just selling premium. You name your strategy, you name your genre of trade. What we have built here at Theotrade is a Netflix for traders. And before I go any further here, and I'm going to tell you right now, there's some amazing incentives that we're going to give you here at Theotrade. Before I go any further, every one of you needs to know, once you go through a 5-hour course, we don't just boot you out and go ahead. You get to see our trades. You get to see everything we do. It's the full Monty. And you can actually ask us direct questions. You can email us and get a direct response. You can email me and get a direct response. That's why I brought that up right up front. Why? Because I want you guys to know that. Like, you can email me and say, hey, am I even doing this right? I've never sold premium before. I had no idea what I'm doing. Okay. If you want to learn this business, I'm telling you right now, Theotrade is the place to go. There are 6,000 people right now on our site, 6,000 people that are actually looking at and trading with us. Not everybody's using Ultima. Okay. We do a lot more. This is pretty wide spectrum. I am your resident options geek. We also have a futures geek. We have an in-house psychologist. Okay. We have a swing trader. I'm going to introduce you to all of them, but you're here today specifically for Ultima Trades because I'm telling you right now, this is the place you want to be. So I am the trade instructor for this course. This course was recently recorded. It's a 5-hour course. It is archived. It is available immediately for streaming, meaning that you'll enroll today and you start streaming. Check it out. Before I go any further, again, I'm going to take you through what some of the bullets are, some of the course curriculum is here in just a moment. So you go through this 5-hour course. Before you even do that, you can basically grab the entire checklist and look through the checklist, meaning that before you've even watched the course, kind of flip through some of the slides. The class slide deck that includes all the entry and exit criteria is just sitting right next to the course. Yes, you can stream the course. Yes, you can stream all 5 hours, but we even have a quick start guide to this. So the class slide deck that includes all the entry and exit criteria, the checklist, is available immediately for download. So you're going to be able to download that immediately. The other aspect is we can stream this right off of our website to you 24/7. But if you have a mobile device, which many of you probably do, you can download Theotrade Mobile. We built our own mobile application. It works on Android, it works on Apple, it works on iPads, it works on Android in terms of tablets. And then you can actually download the entire course and watch it. Even if you're in an airplane, you'll be able to watch it. Again, we built literally like a Netflix for traders where you have access to all of our content whenever you want, right? Now, I'm not even close to being done. We have an incentive for you enrolling for this today. Bear with me for a second. This is the Ultima Income Generator course curriculum. You're going to learn how to sell premium, but you're going to learn, more importantly, how to build a portfolio of high probability trades that generates consistent monthly returns, regardless of your starting capital or experience level. Never worry about experience here because we have classes that are expressly designed to ramp you up specifically for this course. We have detailed entry and exit criteria for selling options premium while keeping risk at a minimum. You're also going to talk a little bit about the Greeks in this class and learn how to manage your positions, okay, through some of the Greeks. You're going to learn to use a risk array. That is my favorite part of this class. The risk array is going to help you visualize risk, okay? So you're going to be able to see profits and or risk before the markets ever make a move. Like, you're never going to be left guessing, like, can I lose $5,000? Go fish. There's no go fish. It's going to tell you exactly how much money you're going to make, how much money you can lose, how to properly allocate in a way that's actually going to reduce risk. There's an entire allocation session in here. Minimize any risk in your portfolio, really, really hands off. You're going to discover risk mitigation techniques. This is the risk twist spread. This is the gamma iron. This is the VIX volatility spread to hedge even the most extreme market environments. And how to sell premium in small accounts. 2 hours of this 5-hour course, 2 hours is actually dedicated to smaller accounts, which is fine. And you go, what's small account? Small account can be everything $100,000 and below. Okay. Again, I think that's a fair assumption. Sell premium in a smaller account and or retirement accounts with innovative new trading vehicles that have never been available before. The other aspect, and I throw this up here right now, it's completely riskless trade. Theotrade is a riskless trade. There's a 90-day money back guarantee. So if you're not satisfied within the next 90 days, we're going to give you access for 90 days. Right now, we're going to give you access for 90 days. Okay. But if you're not satisfied anytime in the next 90 days, just email us anytime in the next 90 days. Support@theotrade.com. You don't have to call us. You don't have to give me a sob story. Okay. There are no stipulations in the money back guarantee. We just do this now. Okay. We used to have stipulations like you had to trade, you had to do this, do a little dance, make a little love. We tried to stop like the grifters from coming in and being like, let me just see some free stuff. Because I'm going to tell you what happens. You're going to come in here and you're going to check out what we do here at Theotrade, and you're going to realize, okay, you could spend $30,000 on an education elsewhere. You aren't going to get a fraction of what you can get here at Theotrade. That's why there's 6,000 people on this site right now. So the money back guarantee has absolutely no stipulations. There's no excuses. We don't ask any questions. There's no commentary needed. Just email us and ask for your money back. Okay. And I want you to understand, we want people that want to be here at Theotrade. We want everybody to be happy here. We don't want anybody, we don't even do memberships anymore. Like we used to do memberships like, come on, it's $100 a month. We don't even do that anymore. Why? Because people don't like memberships, like a gym membership. How do you get out? You have to give blood to get out of the membership. It's ridiculous. To go right now to theotrade.com/skew. It's S is in K, K is in S is in K, S is in Sam, K is in kick, E is in echo, W. Theotrade.com/skew. You can enroll for it right now. And again, it has the money back guarantee. You will see the price in there. We are giving you access for 90 days. Anytime in that 90 days, you can decide that you want to, either bail out, get your money back, and we'll just give you the full 90 days back. We don't prorate it. We don't do anything like that. Okay. That crap isn't right. We're talking a few $100. It's not going to bestill my heart. We have 6,000 members on here. Okay. A few people that need their money back, like we get it. And we don't ever want anybody to have to go to their credit card company, anything like that. Listen, whatever. It's a couple $100. We'll give it to you. It's not a problem. Theotrade.com/skew. You want a bonus. And this is where I said, we're going to give you some incentives to enroll today. Theotrade goes beyond one indicator, one class. Like we don't just give you a class and go on your merry way, or one indicator, go on your merry way. We get that people want everything, and they want everything to trade, invest, and they want it at one place, and they want it at one price. First thing we give you is a quick start beginner's guide video. What is that? If you've never put on a trade before, in fact, I'm going to show you exactly what it is. All right, what it is, what it could have been. This is Theotrade. Wait, I'm going to actually pull it on there and not have Microsoft snap it off my screen. So this is Theotrade. And on the site, let me hit F11 here. And on the site, this is the Start Here menu, Options 101. This is for absolute newbies. Options 201, Options 301. I tell you right now, the most experienced trader in here, you got to go right over here to order execution. You're going to love it. I don't care how experienced you are. I had 15 years working with order routing and order execution part 1, 2, and 3. That class will change the way you feel about this business forever. Even talks about payment for order flow and Citadel. I explain it all in there. So that is the quick start beginner's guide, right? If you've never put on a trade before, we get you ramped up from literally 101 to pretty much 601. Number 2, we're going to give you access to the full library of classes that we've done since inception of Theotrade. We launched Theotrade in 2016. So I had to take off time between TD, Theotrade. We started putting together courses and curriculums. 2016, we launched. You will get access to every single class since we've done this from inception. That includes the Ultimate Income Generator. It also includes the in-out spreads class, probably the most prolific class we've ever put together. Surviving and thriving in extreme volatility, volatility back spreads, growing a small account with black book spreads, how to collect income being short. Yes, I am telling you, you get access to every one of these. Every one of these classes is like 3 to 4 hours. Okay, I said it's like Netflix. Guide to selling high probability spreads, day trading NASDAQ futures. Every instructor that's here, you get access to everything that they've done. Okay, I'll show you the instructors in a moment. Essential skills for consistency, covered calls, top 10 skills for growing a small account, pairs trading, you name it. Okay, you have access to it all. 100+ classes. Bonus number 3, all access pass, Theotrade VIP. What does that mean? It's 3 months access to TheoStream. This is a live trading chat room. Okay, if you want to see what it looks like, I think no better way to show you than what it looks like is to actually bring it up. Okay, what you are looking at right now, I'm just refreshing the screen. This is live.
Yeah.
So I'll mute the sound over here, but what you're actually looking at right now is Tony Rago's screen. This is our NASDAQ future. All this gentleman does is sit here and calls out trades throughout the course of the day. This is the actual chat room. Okay, in the chat room, what do? This is just clients talking back and forth. In any given day, we now have over 2,500 people that are in and out of the chat room on any given day. So over 2,500 people in here. Okay, I like this. The bears are coming. Bears are coming, right? And you can even see the instructors there. Okay, they're actually highlighted. So you can see everything that's posted by an instructor pretty much called out. So you get to see and trade with us live. Let me make sure I actually freeze that, eat up too much bandwidth. Okay, so you trade with us live. On top of it, we're trading live, real-time trade ideas. Okay, if you're not available, like not everybody can watch 6.5 hours a day. We do text and push notifications. I'll say that again, we do text and push notifications. There are 5 different trading portfolios. We also have daily coaching sessions, which is continued education. And probably something I weigh the most into, we directly answer your questions via email. And we're not talking about like, my brother's friend did a trade on Microsoft. Just get to it. Most of us were in the brokerage business. We know how to answer trade and trade related questions. Speaking of which, here are the Theotrade instructors. Jeff Bierman, analyst, trader, former chief market technician. If you've ever been on the Thinkorswim platform, you owe a debt of gratitude to Jeff Bierman. Jeff Bierman built over half the technical studies on the Thinkorswim platform. He's also a professor of finance at Loyola in Chicago. Matt Williamson is a market neutral premium selling strategist. This is like our in-house resident engineer option geek. Corey Rosenblum, CMT, senior strategist and resident swing trader. Brandon Chapman, CMT, macroeconomics, technicals, fundamentals. Brandon worked with us at both Thinkorswim and in TD Ameritrade. Brandon actually wrote a course manual, an education course manual, while at TD Ameritrade. They used to charge $20,000+ to attend Brandon's 18-month long class. Actually, it was $24,000 for 18 months. Some of you probably took the class. Brandon wrote the course manual for the $24,000 class that lasted 18 months. And he'll be the first to tell you what we do here at Theotrade absolutely blows it away. Then we have Steve Slim Miller, 43-year veteran, stock options and futures. He is our in-house psychologist. There's nobody better in this business. Tony Rago, NASDAQ futures. All he does is trade NASDAQ futures throughout the course of the entire day. Last but definitely not least, another individual that comes from Thinkorswim, TD Ameritrade, Blake Young. He's a market profile, futures, currencies, and commodity trader. So everybody has their own genre of trade. Everybody specializes in a unique and different area. All right, this is actually some of the crew here at Theotrade. We also give you access to 59 proprietary indicators and scans. This just comes with it. So today, you get everything we're talking about, 100 different classes, the Ultima class, you get the proprietary indicators, gravity points, auto expected move. By the way, I'm going to give you the link to the auto expected move here momentarily. There's a Theotrade RSI gear. Quantix, next gen squeeze indicator, all right, sizzle index, unusual put options activity, Theo quant trade setup, SPX expected move. It's another like $1,800 worth of indicators. We give it to you because to be here at Theotrade is to be involved in everything. Like we don't say like, this is the secret squirrel spot that you can't have access to. We give you everything, okay? Everything you're going to trade, everything you're going to need to invest, and every indicator. Number 4, we give you the Theo Theta live portfolio. This is Ultima premium selling. This is access, okay, to my portfolio. No holds barred trading approach. You can see everything that I'm going to do. Full disclosure on all trades. Opening and closing all hedging positions. You can watch me trade and discuss options and positions. Like I don't think anybody actually shows. When I say the full trade, it's the full Monty. That's it. We give you everything. We also introduced, because this was such a hit, we introduced the Theo Theta small portfolio, which is for smaller account size. And you can follow along verbatim, or you can actually kind of ad lib a little bit here. I think it helps everybody if somebody's holding your hand initially and getting into the portfolio. This year has been phenomenal for Ultima premium selling. It's just getting better right now too. This is what that portfolio actually looks like. We show you all the opening trades, okay? And it couldn't be any easier. We just set it up like a spreadsheet. Open trades, close trades. You can tell immediately what's left open in here, okay? And then what's effectively closed. And we do that simply so at a glance, you can see, oh, perfect, man. I know exactly where we're at right now. We also do a Theo Theta weekly update. When I say a weekly update, this is a 12-minute update that I do on a Friday morning that recaps everything I've done in the Theo Theta portfolio and Theo Theta small portfolio for the entire week. In 12 minutes, you can get up to speed on everything we've done. And these trades are not that time sensitive. Like people are so worried, like, oh, this is going to be time sensitive. I'm going to miss it. You're not going to miss anything. They're pretty slow trades. You put them on, nothing's happening. And you take them off, a couple weeks later, maybe a month. Okay. You get access to that again. The Theo Theta live portfolio, it's huge. Next, technical analysis toolkit. This is predominantly from Jeff Bierman, technical analysis 101, 201, MACD indicators, timing-based trading systems, pattern recognition, and 21 other technical analysis classes. Number 6, day trading treasure chest. I can get that one out. This actually is heavily Corey Rosenblum and Tony Rago. So we have expressly designed technical analysis classes. I'm not your chart guy. No, I went out and found somebody that's much better than me at technical analysis. Day trading, probably not your guy. That's what Tony Rago and Corey Rosenblum do. Day trading ES futures blueprint, consistent intraday strategies and setups. Okay, and there's 11 other day trading classes packed in here. Bonus number 7. This one, I'm telling you right now, seriously, write this down. Okay, the 5 essential building blocks to successful trading. 43-year veteran trader, Slim Miller. That, the most experienced trader in here, you'd be shocked at what you learn. This guy has actually traded more capital in one day than most of us will ever do in a lifetime. Okay, Slim Miller in the 1980s, while still on the floor, was making or losing 7 figures a day as an individual trader and only grew thereafter. Slim's awesome. He is the best in-house psychologist we could possibly hope to have found. And this course, again, it'll change the way you think about this marketplace. I put a huge amount of weight into this. Again, it's 5 essential building blocks to successful trading. The reason I say write this down, because there's a lot of stuff we throw at you. I want you to be able to go in there, start watching Ultimate Trades. And when you're done with Ultimate Trades, find in, this 5 essential building blocks to what? To successful trading. Because I can tell you, it's necessary. You got to get the right mindset in this business, and this man gives it to you. All right. Number 8, quick start guide to Ultimate Trades. When you go out there and you buy a piece of technology, there's always like this quick start guide to open it up and be like, boom, I'm running. That's exactly what we built here. We took Ultimate Trades, okay, and we whittled it down to the most finite areas. We say, all right, this is getting started with Ultimate Trades, quick start guide. And we actually put together in a PDF file what our members are saying. This comes from Jeremiah back in March. My first 4 trades following exactly the details in your Ultima class just closed out using GTC orders set right after getting into the trade. It's paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. Listen, Theotrade includes everything you're going to need to invest and trade. We do classes, we do coaching, email access to the instructors. We give you access to a live trading chat room. Some firms are going to charge you hundreds and hundreds of dollars a month. We give you access to the live trading chat room. We have indicators and scans, and we give you access to a mobile application 24/7. It's everything you're going to need to succeed in this business. Okay, we literally built the Netflix. I mean, Theotrade is the Netflix for traders. It's $297 for 3 months. That's it. Total Theo is what we call this. It's $297 for 3 months. And I want to be really, really clear about this because there's going to be 100 different people asking 100 different questions right now about this. Look, this is a one-time fee, okay, for 3 months. After 3 months, if you want to do it again, it's $297. It's not an introductory price. We don't do that. And, okay, it is not a membership. It is a one, okay, time charge, $297 for 3 months. You decide after 3 months if you want to do it again. And again, access to everything that we've discussed about. I'll recap it here momentarily. It's theotrade.com/skew. Once again, I also want to reiterate, there is a 90-day money back guarantee. If you're not satisfied anytime in that 3 months, just email us support@theotrade.com, receive a full refund, right? There are no stipulations whatsoever to the money back guarantee. There's no excuses, no questions, no commentary. Just email us and ask for your money back. And if you get your money back, you get to keep bonus number 1 on us, which is the quick start guide, which is all the way 101, 201, 301, 401. We actually give you that start guide. Get into Theotrade now. We're going to work with you directly. There are 30 spots. Here's the incentivized area. There are 30 spots on the Theotrade riskless deal today. The first 30 individuals obviously get a complete free ride for the next 3 months. A free ride being that at any point in the next 3 months, if you're not completely satisfied, you have a money back guarantee. It's a matters of obviously of size as well, because we trade live and we provide unlimited email mentoring. If nobody does that for $300, okay, you have somebody you can bounce ideas off of for the next 3 months for $300. I'm going to tell you right now, you shoot us one email, it's going to be worth more than $300 to you, right? The $297, the riskless offer has never been available for with Ultima income trades and the Theta Live portfolio. So again, I'm going to throw up the site here momentarily. What our members are saying, just closed year-to-date profit in Ultima trades. It's paid for a yearly Theotrade subscription. That comes from John, right? Everything you get today, Ultima income generator, quick start guide, right? 100 trading classes. This is actually the VIP card to the trading chat room, Theta Live portfolio, okay? Obviously the technical analysis toolkit, day trading, mindset mastery with Steve Miller, and the quick start guide. Go to theotrade.com/skew. In fact, I'm going to take you there right now because I want to show you. We will actually read off a few of the names that come in here. Again, there are 30 riskless spots left. And we do that again. Why? To incentivize you. When I say the 30 riskless spots, okay, 30 people get the 90-day money back guarantee. And we do that expressly to incentivize people to enroll and enroll today for it. We're talking $297. The reason I actually brought this up, this details everything, okay, that's involved in Theotrade. But more importantly, when you click right here, add to cart. And again, I want to throw the address up there while that's populating. Okay. So you go to theotrade.com/skew. When you click add to cart, your billing information, okay? One very important aspect here, the phone number. If you put your phone number in, it will automatically enroll you for text messaging. Don't panic. We don't send like text. We don't do that. Okay. A handful of texts come out at most in a week. We're pretty careful about what we send out. Like the Ultima trades, it's pretty laid back. Like you sell some premium, you don't do that much. You sit there, you pull it off a couple of days later, and you put something else on. You're just kind of recycling inventory. Put your phone number. If you are out of the United States and you cannot get text messages, then you can download. Okay, you can actually download the Theotrade mobile and get push notifications. The other aspect worth noting, You can actually pay $297 up front, or you can do 2 payments of $149, or even 3 payments of $100. I just throw that out there because it's something I don't even mention on the site. With that, again, it's theotrade.com/skew. Again, there are 30 spots. I will read off the name. It takes me about 6 to 7 minutes before I see your name kind of populate in here. So just be aware of that. When I say it takes about 6 to 7 minutes before I actually see your name. So there's 30 spots in here. By the way, if you are looking for the link to the auto expected move indicator, if you're enrolling, don't worry about it. We'll just give you access to everything. But if you cruise back over to this site, right towards the bottom of the site, the auto expected move indicator for Thinkorswim. It's actually located right down there. Again, Ultima income generator class. It's available on demand. Wait, one other aspect I feel I should mention. Late September, early October, there's more classes coming here at Theotrade, specifically from me. Starting late this week, I'm in the midst of actually building a brand new class also surrounding premium selling. You're gonna love it. So you're enrolling now and you will have access to all of these future classes. As we come into fall, like it's on right now, people. Listen, it's September, October, November. This could not be better months to be part of Theotrade, because this right now is when we go hog wild building classes. Like this is the in season. People are coming back, kids are back in school. Let's go. And that's exactly what we're going to do. So theotrade.com/skew. Again, what our members are saying, this comes from Jeff. Wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my ability. After each session, I watched the recording, do the homework. I feel each week that my knowledge of options trading is growing steadily and rapidly. Obviously can't speak for my classmates, but it's going very well for me. Thanks for great instruction, comes from Jeff. This one also comes from Todd Summerall. Then I'm going to answer some of your questions here directly. From Todd Summerall. Don't know if you remember, but I emailed you a few weeks ago and you told me my delta was positive a couple thou or more. Basically, this guy owned a ton of stock. He had so much risk, and I freaked out when I saw it. And I tell you, you told me to smash it or I was going to be in trouble. I smashed it. You saved my account. Just want to thank you for your information. Before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of my team. My finances would have been a goner without your advice. You can use this if I want. I do, and that's Todd Summerall. The reason I use that email, this isn't to gloat about, this huge P&L. This is actually to gloat about, we just saved this guy's entire retirement account. I mean, he had so many positions in a leveraged fashion in a retirement account. It was going to be a goner, and we saved them. All right. And that to me is critically important. Again, go to theotrade.com/skew. As you do, I'm going to, as you guys are enrolling, I'm going to answer some very generalized questions for you. And then I'm going to go into some very, very specific questions for you. And again, it takes me, and I'm actually watching on my mobile device over here. Oh, it takes me anywhere, again, 6 to 7 minutes before I actually see some of the names populate in here. Okay, let me actually get through some of the general questions, then we'll get down into the finite details. Number one, people always ask me, what do you need to get started here? You need a laptop, but I honestly don't even think you need a laptop anymore. You can actually use a tablet. I don't have my my iPad sitting here, but I have my phone. You can actually trade pretty actively right now, but I kind of like the iPad or any type of tablet if you're going to do this, more full-time. Okay, when I say full-time, like if you're really going to sell some premium, even though that's not like a full-time thing, but you should definitely at minimum have probably some type of tablet, which they're $300. Even if you wanted an iPad now, you don't have to get the fancy iPad. I don't have a fancy iPad. Okay, I have a 3-year-old phone now too. It's crazy, but you need an internet connection. Okay, and that's it. I mean, we give you everything from the absolute novice to even the most extreme. Like we give you everything. And if there's something that you need, and I'm serious about this, that you don't think that we have here at Theotrade, I want to know about it. Shoot me an email. Number two, this is not a membership. You're not going to be auto renewed or billed again, period. You have to decide if you want to continue to do this. And I always say this, like, it's a great model. We want you to be here. Okay. You have to want to be here. I think that that works a lot better because, again, I don't like the whole membership thing. That always scared me to death. In a membership, you're like, you can't get out. That's not what we do here. You have to want to be here. We want you here. And I think it's a good relationship. Okay. Number 3, we provide Theta weekly video updates so you can follow all the moves. This is regarding the sale of premium. We do weekly videos on the sale of premium. Okay. Number 4, we archive everything. Every single word spoken here at Theotrade is archived. We understand that you can't watch 6.5 hours a day, 5 days a week or whatever, which is, it's fine. But you might have like a favorite person. Maybe it's me. Maybe it's, Blake Young. Okay. Maybe it's Brandon Chapman. You kind of find somebody that you really love that's on, and you end up watching their stuff every single day. Everybody does here an hour a day. The chat room never stops. It never stops. We go for 6.5 hours. One guy, I'm on first thing in the morning. I'm always the first hour in the morning. Why? Because I'm a morning person, right? So I do the first hour in the morning. Then it jumps over to like Jeff Bierman. Then we actually typically go to like, Blake Young, and then it goes to Brandon Chapman and or Matt Williamson, and kind of goes from there. So Corey Rosenblum typically wraps up the trading day. In fact, right now, as you guys enroll, you can hop in and listen to Corey into the close. Corey into the close. So number 5 here, we provide you access to Theotrade Mobile, where you can download the archives. So if you can't watch live and you want to see recorded, just watch it on the mobile application. And the mobile application is cool because you can actually watch us at like 2 times the speed. It's I sound like a chipmunk. I probably sound like a chipmunk regardless because I drink way too much caffeine, but that's fine. Number 6, you add your cell phone number when you're enrolling, and you're going to receive trade ideas via text message. Okay. And you can also download Theotrade Mobile. Everybody should download Theotrade Mobile because the mobile application is kind of cool. It doesn't leave anything to chance. You know what I mean? Like Theotrade Mobile, it's a push notification. So you get the push notification and you get the text message. I think it's a lot easier that way. Okay. Oh, number 7, you can email us anytime. You're going to receive a response within 24 hours, including trade related questions. This is something I always put the 24 hours in here. And again, this is not a negative, but you have to give us at least 24 hours. Why? Because otherwise people will email us with 5 minutes to go to a closing bell on a Friday afternoon. And I don't mind saying this. I trade. Okay. I trade, people. You want to see trade? I trade a lot. Okay. I actually haven't done that much today, but I trade a lot. Like, how much is a lot? So I don't know, this is one account, but this is 360 days. How many times did I trade in the last 360 days? In this account, I traded 574 fills. Okay. So I execute trades, and I think that that's important. But when it's coming into expiration Friday and there's 5 minutes to go to the close, give us a little time, please. Like, you know what? Things don't happen and develop like that, in the marketplace. So sometimes we tank pretty quick. And by the way, when we tank, we do everybody here at Theotrade, when the market really moves big, okay, everybody at Theotrade just sits there and answers emails all day. I mean, we just glue ourselves to the screen. I mean, it's just part of it. So again, number 8 over here. By the way, trade related questions, fire at will. There's nothing we're not going to be able to answer. If it's not myself, I'll get you to Jeff Bierman. It's a technical analysis question. If it's something, a little bit like, esoteric, we got a guy for that, like Fibonacci specialist, you name it. We have each genre of trade covered. Number 8, you're going to gain access to every course we've done in the previous 5 years. Classes, coaching, every single word spoken, everything is searchable. We actually have a search engine built into Theotrade. Name a topic in trading, and it'll pull up a query on there. Number 9, variations of the trades available can be done inside of an IRA or retirement account. In fact, Tastyworks, this is Tastyworks. This is my IRA account, and I'm constantly trading in and out of the IRA account. So you get to see everything I do in an IRA. All right. Number 10, we here at Theotrade can help you get approved for options at several major brokerage firms. This is always also a sticking area. People go, I can't do what you're doing. Yeah, you can. We'll give you the right firms to use. By the way, also, if you're Canadian, we have firms that we work with, but you're Canadian, it's a little bit more difficult. So there's some firms will suggest, even if you're in Canada, like Australia is easy. If you're down, if you're an Aussie, if you're over in Europe, no problem whatsoever. We got you covered. But Canada tends to be a little bit different. They have some strict regulations up there. Number 11, remember, 30 riskless trade spots are available. I'm going to read off just a large batch of names, in fact, right now. Then I'm going to answer some of your specific questions. But listen, get results, take action, and roll for Theotrade now. There's no risk. There's absolutely no risk in this. The first batch of names, Robert O from New Jersey, Doug L from North Carolina, Brian S from also from North Carolina, Gerald J from Tennessee, Scott I from New York, Andrew P from California, WMB from Texas, Kevin R from Massachusetts, Anthony M from Arizona, Mike K from Illinois, Pierre D from Canada. So Pierre, we were just talking about you in Canada there. We can help you. Shoot us an email, support@theotrade.com. We'll give you a few Canadian brokerage firms that we work with. All right. Let me answer some of your specific questions. And again, as names populate in here, I think I only read off about 10, 12 names. As I said, it takes 5 to 7 minutes to show up. Some of the detailed questions. First one came in and said, which hedge do you use? How do you determine the hedge to be used? The hedge actually used, okay, has everything to do with what the skew looks like in the marketplace. And I'll just tell you right now, the skew in the S&Ps is massive right now. So we use currently a VIX vol spread, and there's literally, part of the course structure is on the hedge. The hedge is critical. It's absolutely critical. Like you can't get to the part of selling premium unless you hedge, right? Like those two have to go hand in hand. So to understand the hedge and which hedge to use is absolutely a critical component. It's one of the reasons that we do the Theta portfolio. The Theta portfolio, because to eliminate a lot of your questions, like otherwise people would be emailing us constantly. To eliminate a lot of the questions, I just basically said, you know what? Why don't you guys just look at my portfolio? And you will literally see verbatim trade after trade after trade that I'm executing, okay? And you get to see which hedges I'm using. And that's, I think, one of the easiest ways to do it. But, we want you to be able to do this on your own as well. So as you actually download the courses and view the courses, it actually walks you through precisely which hedge to use and how much hedge to use, which is, again, it's critical. Like, and people don't really get that. It's like a critical component of it. Oh, you know what? Somebody said, are all these trades 30 days, some shorter, some longer? Some are shorter, some are longer. No, there's definitely variations. If you had to pinpoint, though, and you said, Don, you're selling premium like 90 days out, how long is the typical trade held? The answer to you would be is less than 30 days. The average trade is going to be held. The average premium sale will actually be held less than 30 days. However, there will be some stragglers out there. Once in a while, you'll sell something and the market will keep moving against you. It's taking a loss, taking a loss. You're not hitting your threshold for pain. It's fine. It just sits there until, it comes to fruition. Time decay can take, well, time. All right. Oh, you know what? So I love this, this next question. It says, I love your idea on needing hedges going forward, but the cost of the hedges has always scared me. Can you please show me a hedge cost example of the gamma iron? So better than to do a gamma iron can be a little bit complex. Okay, and I'm going to tell you exactly why the gamma iron can be complex. The gamma iron can be complicated because you have to, the cost of the hedge is not much, but you have to know exactly how many gamma irons to use versus how big the portfolio. But let me actually show you a better example, okay? And I'm going to show you an example right here in VIX. Why am I going to the VIX? I'm going to go 70 days out, and I'm just going to make a quick point. The VIX has a really interesting property on it to make it the hedging vehicle of choice. Like, so if the market's going to crash and burn, the VIX is going to explode in price. I want you to visualize what I'm doing here. Okay, we are using skew in the VIX in our favor. And you're like, what do you mean? Okay, just look, for instance, at these options right here. In fact, I'm going to highlight this, and better yet, in a brighter color. Look at the options right in here, like right there. Okay, imagine you buy this option. That option has 121. Forget about the price. Doesn't even matter. That option that you're buying has 121 vol associated with it. Okay, let's get crazy. Let's go out there, and then against that, here we'll get crazy and do this. We'll sell something out here, which has approximately 146 vol. So we're buying 120 vol and we're selling 146 vol. Skew is then dramatically in my favor, and this hedge is incredibly cheap relative to the amount of risk that it covers. I mean, this is a 30, for instance, 55 spread. That's a $25 wide spread, okay? But if you're concerned about the cost of the hedge, well, then you should definitely learn this, because we're selling a put spread to finance the cost of the call spread. Shh, don't tell anybody. The hedge upfront cost is zero. Sometimes they end up paying 100, 200 bucks for it, but we actually show you exactly that. I don't want to pay for the hedge either, man. I totally get it. So I think that that's kind of an important concept. All right, onward and upward from here. I think a few more names are actually popping through right now. I saw Thomas B from Texas. Bear with me. I'm watching the names actually populate through here. Okay. Yeah, Thomas B from Texas. Walter S. Okay. And I cannot pronounce your name. I'm going to call you Shirk K. Did I do a horrible job? I apologize if I did. Just reading off a couple of the names that have enrolled, and I thank each and every one of you for enrolling. And by the way, I'll be back over in the chat room here in the next few minutes. Okay, a couple more trades over here. Oh, I love this. So somebody said, according to my Thinkorswim trade ticket, selling 10 D-SPY calls for $1 requires $50,000 buying power. Does that sound correct? It is correct, but there's a way to circumnavigate it. So shh, don't tell anybody, because that's actually one of the best secrets in the Ultima class. So do not worry about the reduction in buying power, because we're gonna axe all of that. It's a lot easier. Okay, and you're just a product away. Just, you know, you want to trade something similar to the spiders, you're a product away. It's very, very easy to do. Okay. Oh, I like this. Somebody said, when you sell these longer dated options, will you also hold a position in the underlying? No, I do not hold a position in the underlying. I will actually hedge in something like VIX. I will hedge in an alternative product. You can't hedge in the same product, because if you hedge in the same product, then the skew that you're going after is also going to be it's going to be your greatest ally and your worst enemy at the same time. So you have to hedge in a product where skew is beneficial, like I just showed in the VIX. Like it's critical to be able to kind of comprehend that. All right, I think I got one more. Oh, I like this one too. It said this can be information overload. Is there a flow chart recommended? The order of classes? Absolutely. Okay. And I'm going to tell you something even better. When people say like information overload, there's 100 classes. I'll tell you what. Tell me what you're looking to do. Just shoot me an email. Tell me what you're looking to do. It's okay. I don't mind. I'll answer it myself. Yeah, there might be 6,000 members here, but honestly, how long does it take to answer 30, 40 emails a day? So 30, 40 emails a day. We have 7 other guys besides myself. And then, okay, we have Brian Aponte, who's just a trader on the backside of things that helps answer email. What do you got? You got almost 10 people answering emails. Each of us can handle easily 40, 50 emails a day. You realize how many that adds up to, okay? In the busiest days ever, we've had handled over 1,000 emails here. Bring it, people. Shoot me an email. I have no problem with that whatsoever. Because you know what, though? I always tell people, it doesn't matter, like, you're going to pay 300 bucks for this. And, you know, it's like a $30,000 education. I mean, you couldn't pay $30,000 in another firm and get an education like this. And my feeling has always been, and it's just my feeling, I think for your money, you would rather be overwhelmed rather than underwhelmed. At least I would. Like, I'd rather pay and be like, holy crap, I just hit, like, you know, it's like a buffet. And, you know, you're just sitting there. Buffet might not be the greatest example these days. Nobody wants to go to those, but it's like a buffet. You can just, you know, just gorge yourself in 3 months. And that's why people, you know, we have 6,000 people on here. It's funny because we just had somebody the other day. They're like, I'm going to take the summer off. And I'm like, you'll be back. Everybody comes back. Nobody ever leaves Theotrade. And if you do, you always come back. Why? Because you can go experiment with every other education program out there. You're going to spend tens of thousands of dollars. They'll always end up here. And it's one of the things. I mean, we have built, you know, what is the pinnacle in terms of trading education. And we're traders ourselves. And it's important that though, that we're here to be able to help you guys, walk you through trades every step of the way. So with that, again, it's theotrade.com/skew. If you guys need anything, I went way over in terms of time here, and I do want to wrap up in an appropriate time frame. If I didn't get to your name, and I apologize, but I'll look really quick again. If I didn't read off your name here, okay. Again, it takes just a few minutes for some more names to be able to come through. Okay. Yeah, I don't see too many more. Oh, excellent. I think I got most of them, at least for now. It's theotrade.com/skew. Shoot us an email at any point, and I'll see you guys in the